Okay, let's have a look at the charts, starting with the Canadian dollar pairs. There is really nothing I can add to the US Canadian situation other than to say that the view in May, when we were at 137.50, that we would at some time see 123 is still fine. I didn't expect it to go straight there, but that's how it goes. Once a move begins, you never really know how it unfolds, how it will unfold. And in this case, with the bearish divergence, it's been excessively, well, it's been one directional. So I don't have any other levels to work with. Ignore the count. I haven't altered it much at all. And the 4-hour divergence, which I thought was being unusually stubborn, is about to be negated. So there's nothing much to say about this. Now, judging by the other Canadian dollar pairs, it seems like this will perhaps just stretch on. It's very, very, very stretched and very far away from the 8 EMA. But if I look at the other Canadian pairs, at least two of them, I think, Australian and New Zealand, are suggesting lower moves. And Euro-Canadian, I would say probably too. So moving on from this, Australian Canadian, there seems to be a trade in this. Now on the weekly chart, we've broken a, I would say, significant trend line. And on the daily, I'm looking at the up move as being correctional, as so long as we continue to close beneath the recent trend break. And looking at on the lower time frames, I have a trade here on Monday, all the way down to the 15-minute. There is what I think is a 5-wave decline here. So long as the Friday high holds, that is your risk exposure, and the move, the aim on the move is back to the low and beyond. So the trend break, I think, the trend line break, I think is significant, and I think ultimately we are going to continue with the move down back towards 91.91. You can see it's essentially range bound in this market. So I'm not going to change my view on this, and I'm looking for a new trade on Monday morning. That idea on, I think it was Thursday, that this 5 up was going to see another high did unfold from a very small correction, and the whole thing to me looks corrective. So let's see if that 5 down here on the 15-minute chart, so long as the high holds, there is a trade to the downside here. Now, one thing to point out on the the weekly New Zealand Canadian chart. Well, starting with the monthly, this is a downtrending market from here, I think. We found a high at price levels up here, and the June candle was a significant shooting star in a weak price area. Now, what I want to point out on the weekly is, in my experience with trend lines, what usually happens is that the fourth touch is the break. Sometimes it's a third, sometimes it's a fourth, but the fourth is quite common. So, I mean, if you start the originating point as 1 through 3, and this is touch number 4, and now we'll probably see a bit of a gyration here, probably another move up to test a bit higher, and I would suggest that this is going to break from here down. So this is going to be a very good move if it does break, and it's looking like it will off the larger time frame, the monthly. So in this situation, I haven't tried to put a count on this. I mean, you can see what it's looking like from this. I don't need to label every individual swing. I usually try to put a label on something at the end of the move to give myself a print. The rest, frankly, I try to keep in my mind. But what I would say about this is it may see a few more gyrations here. I can't say for sure. It's looking like it's open to another move higher here, but I would suggest that on the weekly it's going to hold bearish. Even if it does ascend, I think it will be sold into. The weekly stochastics are rolling over, and I think this pair will see significant downside over the coming months. The monthly stochastics also seem to be pointing down, or rather are pointing down for now. So it hasn't, at this juncture with a very slight close beneath trend, I would just be wary of another move up on the lower time frames, maybe towards 93.50, 94, 94 and change, and then see that sold into. So far from the high on Thursday, it's just been a three-wave decline so far. So yeah, that's all I have to say. Just be wary of another swing up, though it should be corrective. Now, Euro Canadian has price filled the gap, filled the price gap. It's trying to close as an inverted hammer, but a bit of a weak one. If this is now into wave 3, with wave 1, wave 2, 1 of 3, 2 of 3, 3 of 3, the bounce should be small and insignificant, and it should break here and run. And that on the larger time frame chart, that is still my preferred view, that it will break here and run. The price gap is also going in line with the euro theory, euro speculation that I talked about, I think, in the last video. I am looking at weakness to come into the euro pairs, continued weakness for perhaps a few months longer. On Thursday, there will be the ECB rates decision, and Draghi will speak as usual. So there will be markets moving into Thursday and following that during the press conference. So those Canadian pairs still look bearish to me overall. The local trade is in Aussie Canadian, off the 5 down. Okay, what next? Actually, yeah, since I'm dealing with Canadian dollars, let me go back to oil. Now, it is possible that the low is in here. I talked about this in last weekend's video. The view is that this is 7 waves here. 1, 2, 3, 4, 5, 6, 7. I did label this. Now, it is looking like it's going to break the 47.30 high or so. The question will be if that's just a 3-wave move or if we're looking at something more bullish. Now, contrarian figures, not much change here. What I would say is that I have to take it as being bullish at this juncture. I cannot speculate that it's going to be 3 in reverse because we have enough here with 7 swings to form a bullish move. So the idea that it may come back down to 40, 41, 39, I can't forecast that yet until I see a reversal on the next high. And it is looking like it's going to put in a move to the next high. What I would also say is that on the weekly, it's looking quite strong. It's a kind of engulfing candle this past week, swallowing up the weekly candle before. And I think this is looking good. So as long as it can hold, if it does make a new high and a small correction, look for it to continue and see if it will from there. I mean, look, frankly, the idea is that if it's going to be a 3-wave move, we will see it peter out up here and fall back down for another series of lows. However, I cannot speculate on that now because it's holding an upward ascending angle. And there's more than sufficient evidence, count-wise, wave-wise, that a low could be in here. So the bulls have to stick with the bullish idea for now. 5 waves into here. And if we can see an ascending move, that is going to work well for the bullish idea. If that does break down next week, I'm still bullish if it comes down here. So either way, I'm going to hold bullish on the Canadian dollar. Sorry, yeah, that too, but oil. And but locally as well, right now, I'm holding it as bullish as well. Okay, I'll look at gold and the yen pairs together, but let's go to the dollar while I still have some energy for this. Okay, the data on Friday was disappointing, and that wedge-shaped pattern down here that I was running is being broken down. There is still divergence on the chart on the 4-hour. However, I cannot speculate that a low is near, other than what I can speculate on, or what I can say. See, the way I interpret Elliott Wave and pattern formation is that we see these patterns, we see these, we have these counts, which kind of like open the door for a price move. It's kind of like a message saying, okay, the price can follow this. There's a pattern here. It may work out. The likelihood is that it could work out. The wave count suggests there's going to be a turn. There's stochastic divergence. It's a kind of open door policy whereby if traders, or let's call them kind of market makers, market price movers, it's kind of like they can enter at this juncture. It's suggesting that an entrance is open for them, but it's only a suggestion. All these Elliott wave counts, candles, price patterns, wedges, for example, stochastic divergence, and any other marker, it's a kind of open door suggestion that something could unfold. And in this case, though it looks decent going into Thursday evening, on Friday it broke down off of the rather negative, I think they were retail sales figures from the US and a weaker CPI print, I think, but it's broken down from this, and at this juncture, it's looking like the wedge pattern is not going to be okay. It's come a bit too far, I would say right now, but so far this is holding at this juncture, but this is also breaking down, so at this juncture, I don't have much to work with. Aside from saying there's a possible 1, 2, 3, 4, 5, wave 3 low coming in here from the making this a 5 down. What I want to say as well is that if this monthly bearish divergence on the DX is valid, don't stand in front of it. Don't stand in front of the down move, because this is possible on very weak, like a lack of belief, a lack of confidence in the dollar, traders positioned against it. It can really plummet. It's possible to just like behave like the US-Canadian pair over the past 2 months and not find anything larger than a small correction. I wouldn't stand in front of this. There has to be a clear reversal signal with a 5-wave advance. And so far, everything is a 3-wave rally that's being sold into. So no standing in front of this. All I can do is open, kind of make suggestions off divergence and counts for open door policies for reversals, but nothing more than that. Until then, the dollar bears are in control of this market, and they're punishing it. It's been a significant move so far. As I said before, I think I said last week, in last week's COT video, the net position in the COT market is 0. It's gone back to 0. Longs have been wiped out. So traders are not committed either way at this juncture. It's running at 0, and that is a bouncing level. See last week's video for a brief talk about that. So it is open at this juncture to a move higher, but let's see some evidence first. So tying that into the Euro-US dollar, again, don't stand in front of it. There's enough evidence up here. First of all, price resistance zone. Second of all, there is a chance, though I don't really like how it looks, but there is a chance that we're forming a wedge up here. Though I don't like how the wedge has started out of this big move. I don't really find this valid. But let's see if a wedge does materialize up here. Let's see how it goes. So in addition to a possible wedge and resistance area up here, there is also an extreme in non-commercial positions. They added this week again, I think it was a 5,000 to add as a net figure, and that is a very high mark so far. So that is another warning signal as we come into resistance. There's frankly not much more I can say. A warning, an additional warning not to stand in front of this in case it really takes off, because again, like the US dollar, there is reversal bullish divergence on this pair, same as we had in Euro New Zealand, same as we had in US Canadian, but it's on the monthly chart, so it will run for years if it's going to run. It's not going to stop after, forget about stopping after 2-3 months. This is the kind of thing that, just like US Canadian's been running for 11 to 12 weeks, Euro New Zealand ran for 15 weeks, this will run for 12 to 15 months. So any correction, like I said before, any three-wave correction is going to be a buying opportunity in this. I'm not believing in a more bearish view on Euro US dollar yet. So let's see if anything happens. I am believing in a corrective price action of some manner, but not a bearish view like back to, parity. People who were calling parity at 104, well, it didn't go so well. And I have in mind actually not Elliott Wave traders, some fundamental analysts who were on Hedgeye and other sites. But in any case, that doesn't matter. Just be wary of this. All I can suggest, oh, sorry, one more thing. I've been rambling a little, but one thing. In my stochastics, how I have them set, you see it's been trending up very well here, very smoothly. I smooth these out a little so it's less jagged. When the stochastics get up here to this 90 level and they hold and they go sideways, that is a very bullish signal. It's a very bullish print. It's a very bullish stochastic formation, kind of like here, where it's just like, I'm not going to use any swear words, but it fell over. Up here again, it's holding at that level, and it is a very bullish situation. So again, don't stand in front of it. Don't take a short position unless there is a valid setup, like a confirming wedge, a significant stochastic divergence on a lower time frame with a candle print of some manner, or more importantly, a 5-wave decline on a lower time frame. So no standing in front of this. Again, it's holding up well. Stochastics are not resetting. They're simply whipping up each time. And although I can say on a traditional basis, a narrowing, pointing up market may suggest a reversal at some juncture, so far it is holding itself very well, and the bulls are in control of this market. I cannot suggest any more than a possible wave 3 print at some juncture, some level up above, or soon. We'll see. Okay, no change here. The bullish view on this corrective channeling pattern worked out. Strong move. Not looking bearish. I'm holding truncation. Truncation is my preferred view. I'm not viewing a weak pound down to 120. I think at this level, the US dollar has put in its high. I'm not going to consider otherwise until we see a change. I am looking at this to continue to move up a bit higher. Let's see, we have larger wave 4 level here at a resistance level. I cannot rule out a move to 134 and an overshoot of trend resistance here, trend line, possible trend line resistance here with some previous price interaction points. So far the bulls have it. Nothing has changed in my view just now. I think we can see an overshoot here to 133, 134, and then I would look for a correction. So no change on this at all. Everything is looking good to the upside. The monthly is looking actually really very bullish. So I'll see what happens as it edges, if it does, as it edges into 133, 134, or 132 or so. Okay, the view on Australian US dollar. The original idea, let me go over this, because my original idea was that this downward impulse for A, bit of a big circle, but this boxed A segment was going to be significant. It turned out actually not to be. And although this down move worked, this became obviously a three-wave move and a very choppy one. Well, not very choppy, but a choppy one. And from there, how I'm viewing this now, I'm viewing it as A, B for a bullish triangle, and I'm looking for a five-wave advance from the triangle. So I think we still have a bit higher to go in this. The significant point is the break here. That will open itself up to a reversal for a three-wave move. But if this is a thrust from a triangle, from a B-wave triangle, I would hold this as a leading diagonal, short wave 2 correction, wave 3, wave 4, wave 5. And if we get a 5-wave print out of a triangle for the B wave, I can then call C perhaps is finished, and then look for a bigger move down of some manner. But for now, the bulls are in control. There's really nothing else to say about this. The bulls are in control of this market. And we will look for the monthly stochastics to at least reach the 80 level or a touch above. So no change on the monthly stochastics. I talked about this before, like the US Canadian stochastics. They are crucial in this respect. When you get a significant, for example, US Canadian, significant down move, sideways level, it usually, in a majority of cases, I would say, manages to find the low after going sideways, just like here, move up, sideways, continued. So stochastics are pretty useful for that. They tend to make it, at least once they cross the halfway point, let's say, or closing. In this case, it didn't work out in a downtrending market, let's say, but it rolled over pretty quickly. But in most cases, I would say it works out quite well, that it will go down. And I point this out because an Aussie Canadian on the monthly, sorry, Aussie US dollar, it's the same thing. We had a sideways trending, upward trending stochastic level, and it's broken up from that. So no change, bullish market. Now, New Zealand US dollar, I'm a little bit more skeptical about on the up move because there is an extreme trader commitment to the upside at this juncture. And it was another increase of 2,000 contracts over the last week. And if you look on the longer term chart, it's the highest level. It actually eclipses the April 2013 level. And I think on the FinViz, I'm not going to pull it up, but on the FinViz chart, it's one of the highest all-time levels that they have printed, maybe the highest. So it is at an extreme level still. There's really not much more I can say about that, though. I was expecting a bit more of a down move. I mean, we still have the divergent level, but I'm going to hold this as being open to a reversal here. As long as this trend line, broken trend line, holds as it moves up, and if I see a weak bearish candle and a small 5 down on a 15-minute or 15-minute chart, I will still be looking for this to reverse. It's going to expose itself certainly above 74.80 or so, above this level. It will expose itself. However, it doesn't actually have to get there to expose itself to a reversal because, again, we're looking at a three-wave market all the way back to 2015, a three-wave market, 3 waves here. And again, it's looking like it could just be threes like here. It doesn't have to break the high, and then we may see a bit more of a correction. And then maybe another high. I really don't know how it's going to go, but I am saying that as long as it stays as 3, and we have this trend level, and we have the bearish divergence on the daily, and we have the extreme commitment of traders to the long side, I am going to look, well, non-commercial traders to the long side, I am going to look at this as open to a reversal soon with the New Zealand dollar weakening. Because I would say keep in mind that it is ascending in 3s everywhere. It's descending in 3s as well, and we're ascending again in 3s. So any move, it's still in this resistance band across here, this whole level. So any weak candle going into next week, I will see if we can get a reversal on that. Okay, so that's the dollar pairs. Let's have a look at US dollar yen. There's not much to say about this that I haven't said already. If it's going to turn into a larger ascending move, let's see it happen. It should hold support here. However, that's for the bullish case. It will need to hold support at this last level, in any case 108 and change. But in any case, I would look for this broken trend line to hold as well. See if there's a print here and a reversal going into next week. For the bullish view, for the bearish view, it's exposed itself to a three-wave move here. It made just a new break above the high, and it is open to a bearish move here. Now on the weekly, the candle is not a significant engulfing candle, so I'm going to, in the near term, hold to the upside on this, so long as we don't break down. The move down so far has been only three waves, I think. I'm going to hold this as a three-wave move only. And I'm going to see, first of all, if trend support can be found, because so far on the weekly, the stocks are holding up okay. The monthly hasn't found the momentum just yet, but is still holding up at this level. It is the kind of thing that can emulate, well, copy, let's say, a sideways stochastic level for a few months and have some price whip, just as we saw in US Canadian, sideways for a few months and price whip. And then a continued move up. I still like the continued move up here overall in a larger perspective of months. I still like the continued move up. So I'll give the benefit of doubt to the bulls here and see if there is some support, kind of like, for example, on cable this week in this bullish channel on the 4-hour, we had a breakout. I think it was on the 1-hour is clearer. We had a breakout here. We had price come back down, form a small three-wave correction, and an advance from there. That is the type of thing that can happen with US dollar yen. So I don't want to leap at this stage to the bearish view. I want to see if it can find a three-wave base here and a move up overall. If it does, well, look, if it moves up from here, then gold should decline. Unless there's a break of some kind, the correlation has been really tight. But if we see this overall as a three-wave move, and it doesn't make a new high, or it makes a new high and it's just 3 even, and it does break down, then we should see an ascending gold price. So for the beginning of next week, I'm going to look for a basing into this level of 112, see if it can materialize. Now, I'm not going to look at Euro yen at this stage. The 5-wave move from 123 to 130 worked out, and at this stage, I'm not going to suggest anything else. I will look at gold because of the negative correlation with the yen, US dollar yen. Okay, from the little hammer, it found a move up. There's been some bullish divergence on this. I forgot to look at this. At this juncture, it's nothing. I think certain levels on the chart speak for themselves. Well, at this stage, with the downturned weekly stochastics and the price movement so far, it has not done enough to suggest a change. What I would say is that this move looks like 3 waves. You can actually say that this entire move looks like 3 waves. But this last juncture here from the 6 June high looks like 3 waves. And so it is open to a move higher here. And that would see US dollar yen turn over. Something else I wanted to say about this, which I've just forgotten. Oh yeah. Okay, so these are the stats, the contrarian stats for small trader bullish sentiment, and gold has come off of an extreme level. So there is some strength coming back into gold from an extreme level. The extreme level, the extreme point is the important point here. And yeah, so far contracts continue to decline, but overall it remains bullish. I mentioned this last week. As it nears zero, the bulls find their the will to recommit to the market for another bullish move. Every time the contract's near zero net, the bulls come back. It's an interesting thing about gold and silver in these long-term bullish markets. I went over that in last week's COT video. So a trend break here will be significant. I cannot say, frankly, I cannot say much more about this now because the weekly candle doesn't say so much to me. Yeah, I will pass by on this. There is the negative correlation to US dollar yen, so keep that in mind. I want to give US dollar yen the benefit of doubt at this stage that it will continue the move up. So I'm just going to stand by here and see if there's some type of corrective level. And if there's a clear entrance point, I will mention it. But I don't have anything more at this stage than to say that this is a three-wave move into here. And that the whole thing looks like it could be one single three-wave move. Possibly. Okay, bearish euro. The euro New Zealand is bearish. There was a great high up here this week. Now it's going to roll over. I think it's already rolling over, but I think the stochastics will end up coming back down on the daily. And the weekly stochastics hold bearish. It looks like a bearish close to me. I am looking at a level back below here for a larger three-wave move, A, B, and C. And how it unfolds, I cannot say, and I don't know, but I am looking for it to continue down. From this five-wave high, three-wave move into August or September, Mario Draghi comes out, talks about tapering, talks about restructuring, talks about changes his forward guidance, and then maybe the euro really takes off again. I don't know, but now I'm looking down in this pair. So any chance to sell this pair, I would say, is a good opportunity. It's probably done enough for a little three-wave correction here. So I think we will see the downtrend continue at the beginning of next week. And with Euro, Australian dollar too, same idea. There's going to be some support at trend levels here. And it does open itself up actually to being a three-wave move. This has been impulsive, however, so I would look for a clear five-wave print, and I think we've only done three waves so far. So if there's a sideways wave 4 and a wave 5, it will expose itself to support here and a bounce back up, and it will have to be determined then if this is going to be the entire three-wave correction and a bullish move, or if this is just going to be the first part of a larger decline. Because keep in mind, there is the April French presidential gap to fill, and I think it will fill that. Usually the Euro-Canadian and Euro-New Zealand prices have been filled, gaps have been filled, so I would look for this to be filled too. And it's a very bearish weekly. I'm not going to look at this stage for anything more than a bounce from the trend line. And if there's a confirmed 5-down print, I will see how it reacts from there and favor a corrective move and another decline in this. And Euro Pound, I think finally, after a lot of struggle, Euro pound has found its high. The idea on the daily chart is that we found the B wave high in the last week. It was awkward here, but I'm going to take it as done, and a reversal underway. This is the type of like stochastic look and new high scenario that I like on New Zealand US dollar too. Three-wave move up, stochastics pointing down like this. I'm going to see if we get a reversal in New Zealand US dollar this week actually. But going back to Euro pound, I'm going to favor a down move here. It's looking like the bears are kicking in now, and so the idea on this move, it's been a long time coming and a lot of wild action in here, but I'm going to look now for a continued move down. I would say that if it unfolds as a corrective 3, there may be another move up as a possibility. There are 1,000 possibilities in this market. Though on a bigger picture time frame scenario, I do like the move back down in Euro pound. I do like the idea that 5 waves from, I think it was July 2015, yeah, have been confirmed into October of last year, and we're now looking at a move down for a bigger 3-wave correction. So I'm going to hold this pair as bearish too, and look for a move towards 82. So bearish Euro pound, bearish Euro Australian, bearish Euro New Zealand. I think bearish Euro Canadian, that's my long-term view, preferred view. And Euro US dollar, if the dollar ever finds, oh, bloody hell, I forgot to mention that the DX, well, maybe you saw it, maybe people saw it. The DX level, contrarian level, is again gone back to an extreme low. If it gets down to this range and down to 10% like these two, it's going to be a scream for a buy. But this has been low for quite a while. It's been trending down for months, and it's been under 30 for months. So take it for what you will. But in this case, I'm looking for a down move in Euro pound. And eventually Euro US dollar maybe as a correction too. Okay, one market that has surprised me a bit is Aussie New Zealand. The big question now is, the up move this week has been really strong. Now, is it going to be corrective or is it going to be a new trend? Because the last up move here was only 3 waves. And that suggests another low. It's kind of like this was only 3 waves. So I still, at this level, want to favor the idea that it's going to come down again, based on larger time frame pattern movement, price pattern, that it will come down for another level. As I mentioned, I can view this whole sequence as kind of A, B, and 5 for C, and from the low, 3 waves up. However, it will have to turn now for this idea to work out. Now, if you ask me at what point I will change my mind and consider a more bullish view on this, well, hold on, let me print in some obvious levels here. Well, I like to see a 5-wave advance to find any change. Now, there is some divergence here. I can't answer that question right now. Actually, what would change my mind? At this level, I still want to prefer the view that it's going to come back down based on the larger look of this overall as being 3 waves into here. Into, when was that? March this year. So long as this overall holds a three-wave look, I'm going to look for this to ultimately turn around. If we see a break above local trend resistance here, well, possible trend resistance, I would change my mind. If I see a clear 5-wave print on the daily, I would change my mind. But for now, I want to hold Aussie New Zealand as still. It's a massive move. So I'm going to step back from this, and unless I see a clear break, I'm going to look at this strong upward move as still being corrective. I can't really take it as being bullish at this level because of the three-wave move here. I mean, if this does turn bullish and this three-wave move, we have to take this three-wave move as the low, it's going to change into something like, okay, 5 up here, 3 down, 3 up. It would have to be a three-wave move, 3 waves down, and then we would see a 5-wave move here possibly to a new high, and then a down move. That is possible here. I would have to just change the count here being the low, 3 waves up, so it would turn into a kind of 3-wave correction to a new high to 114, and then a down move overall. But at this juncture, I'm not going to change my mind unless I see a clear break of about 107.50 and then a bullish channel out of the break. So I'm not changing at this level. Bitcoin. No triangle in Bitcoin. Okay, I think that's going to be it. Just 1 second. Yeah, I'll leave it there. If you have any questions, let me know, or any ideas you want to share, such as US dollar, Swedish crown, let me know. And good luck with trading next week. Bye-bye.